Hi, it's Harry Dent with an important update. We've been watching these markets, the Fed stimulus and stretching our economy, and every time the economy slows down and stocks slow down, the Fed and central banks come in again. And we've been saying at some point this won't work. But we've seen, the markets should continue to go up. And we haven't seen signs of a top yet, but we are starting to see those signs. Now, you got to remember, everybody's saying, okay, the Fed tapering, and that's what's going to do it. Well, that will have an impact, especially if the Fed tapers a little faster and a little sooner than the markets expect. But the markets have already reacted to this. And the big impacts of tapering will come several months down the road when an economy without stimulus, without crack, basically cannot sustain itself. So what I'm looking for more is not so much the tapering. What's the trigger or triggers that are going to pop this next bubble? Because we have bubbled back up artificially. And you got to go back to 2008 and remember what popped the last bubble. What was the trigger? And it was the subprime crisis in the U.S. 4 states, California, Arizona, Nevada, Florida, triggered a worldwide crisis. Well, obviously this couldn't happen unless the whole system was overstretched with debt, which we've argued for years, and if demographics slowing, putting strains on that debt. So all we need is a trigger. And what I'm going to look at here is there are many triggers I see building, starting number 1, Southern Europe, still in a depression. Oh, a little bit of improvements in Germany and France here and there and England, but Southern Europe is in a depression, unbelievable unemployment. Spain loans are still going down. Greece, number 2, third bailout. That was supposed to last them to 2020. Here we are in late 2013. They already need another bailout. How much can they keep doing this? How much before they realize you can't turn around these countries? They're uncompetitive. They've got bad demographics ahead. Number 3, most important, one of my key triggers, Spain. Spain had the biggest real estate bubble in all of Europe. It has already collapsed as much or more than the U.S. Real estate prices are still going down. Bank loans, bad bank loans to businesses and mortgages are still going up. So Spain is too big to bail out and the most likely major trigger in Europe ahead. Commodity prices have been falling. We warned about this many months ago and even years ago. Commodity prices are going to go down. When commodity prices go down, emerging countries export these things. Their profits, their best industries and jobs go down. They get in trouble. Emerging stocks keep going down. Number 5, this creates a vicious cycle with China. China now exports more to emerging countries than developed, and if their exports go down because emerging countries are suffering, then China exports less, they slow down, and guess what? They buy over half of the industrial commodities in the world, and that causes commodity prices to go down again. So vicious cycle. That's another major trigger if this keeps happening. Number 6, China. We've warned for years now, the greatest real estate bubble in the world, the greatest overbuilding and stimulus by governments, more than any emerging country in history, and this bubble is showing signs of cracking. Prices keep going up. The government's tried to restrain them, but guess what? Their private shadow banking system keeps getting out of control, growing beyond the government. This bubble is going to burst, and I tell you, people have moved to cities, and there's going to be an exodus from cities, and ghost cities are going to turn into greater ghost cities. This is probably the greatest thing that's going to happen down the road. Number 7, U.S. real estate recovery. We've been saying it's mostly bogus. Some young buyers, but it's mostly speculators, people buying for cash. Well, as stock prices go up, as house prices go up, that looks less attractive for people to rent and flip. And as interest rates go up, it hurts the new buyers even more. So we don't think this is going to last past the end of this year, and that's going to back off. Number 8, rise long-term interest rates. We've always said this will be the beginning of the end. Fed's trying to push interest rates down, short and long-term, but they don't control long-term as much. Rates go up, stock valuations go down. It hurts home prices and home buying. So this is the beginning of the end, and it's happening around the world. Number 9. Most people don't realize 40% of the earnings gains in the S&P 500 have come from stock buybacks. Why? Companies at very low, almost zero interest rates can borrow money, buy back their stock, restrict their shares, and their earnings per share go up faster. This is already slowing. Earnings are slowing. And with interest rates going up, this is going to continue to slow. Number 10, we've been warning this over the last 10 years. Earnings accelerated with all this stimulus. Now they're decelerating. They're going to continue to decelerate. This cannot possibly be good for stock prices and stock earnings valuations going forward. Number 11, in July, now this is just a hint, Durable goods and new home sales, the most important part, the real home market dropped sharply, unexpectedly. We've been looking for this with rising rates and speculators backing off. Now, this may not be a trend yet, but I think it could be. If this continues, this is the beginning of the end. Number 12. We've been warning this. The Fed eventually gets checkmated with all this stimulus. They're at the point now, and the markets know this, if the numbers are a little too good and the economy gets a little too good, they're going to have to taper and back off the stimulus. And we know that the stock market and economy will die within 6 to 12 months of that. But on the flip side, if the economy doesn't keep showing some improvement or flattens out or slows, it's showing that the stimulus is losing its impact, and all stimulus does. Every time we have QE1, QE2, QE3, we get 3 to 4 quarters of growth, and then it slows down again near zero, then they have to do the next stimulus. So this is another sign. And finally, the most obvious, the Middle East, Syria, Egypt, the Arab Spring. We're seeing civil wars everywhere. When do these get out of control? When does something go wrong here? So is that enough things for you to worry about with stocks overvalued? Everybody's saying, oh, stocks are only at 16 times price earnings. But no, if you look at longer-term earnings and not just these short-term trends, they are as high as they've ever been outside of the tech wreck in 2000, 2002. But it's the same valuations we had in late 2007. Same kind of good but not great growth. The economy looks exactly like late 2007. So we're just looking for triggers, and we see them building. What are the most imminent triggers? Greece needing a new bailout. Spain blowing up. Worse loans. Falling interest. Falling real estate. And, of course, the sudden surge in interest rates that looks like it's going to continue. What are the most devastating impacts over the next year or two that could cause this major crash we're looking for? A Dow as low as 5,000 to 6,000. Number one, any major exit from the euro, Greece, Portugal, or Spain, because one will lead to the next. And most important, as I said earlier, China. China has moved 200 to 300 million people just in the last decade from rural areas to urban areas, highly unskilled people, very tentative jobs. They can't even afford apartments there, so they may still have their old rural place. If the world economy slows down, all of these people who are not even legitimate citizens, who don't get benefits, healthcare, education, they'll be the first to lose their jobs. And you know what they're going to do? They're going to run back to rural areas, fast or slow, and cities that are already have incredible excess housing, empty housing, because of so much speculation by their citizens and so much overbuilding by their governments and developers. They're going to be even more ghost cities, and real estate's going to collapse, and cities are going to be empty. This could be the biggest disaster of our lifetime. So that's the worst thing that could happen, the China bubble burst. So again, beware. Stay tuned. If you're not on our free Survive and Prosper newsletter, get on it now. We've got a box on this video. You can check out more. And we will keep you updated, because we think by early next year, the next great crash and crisis starts. Thanks for listening.